Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Monday and it's July 15th. I hope you guys had a wonderful weekend here. And we got a couple economic news releases. We'll start with the retail sales. This is the headline number for the month of June. Now, back in April, we had a 0.5% growth uh, in, in retail sales, and the forecast was supposed to be a little bit larger, and it actually was little bit lower than the previous sales. So obviously came in about half what the expectations were. So retail sales really weren't that good so far for the month of June. And then once you take out the big ticket items like autos, they kind of look at the kind of like this is kind of like a core, so to speak, on retail numbers here. And what this is, we had a 0.3% growth in May, and again, we're expecting a higher number for the forecast for the month of June, and it dropped at zero. So retail sales basically did not exist for the month of June here in the U.S. Um, Obviously, not too good readings. Then we got the Empire State Index. This is the manufacturing in the New York region, and we had a 7.8 on the growth. Anything above zero is considered growth. So right now we're kind of very slow growth in the manufacturing in that area. We had we figured temper down a little bit down to about 5.9, and it jumped up to 9.5. So better than expectations for the manufacturing out of the New York region. So that's good. And then we got business inventories. Not a huge report here for the month of May, but it's out there. It's 0.2% growth for April, and they figure it would be basically non-existent for the month of May, and came up about 0.1%. So not a whole lot right there. But the retail sales and the Empire State Index, the manufacturing numbers are the ones that investors really got to kind of look at and put precedence on today's markets. So keep an eye out for those. So far this morning, the stock market's moving pretty slow, but it is currently up. The Dow is up about 7 right now, so not a whole lot of trading going on. They're still probably kind of deciphering a little bit, but they're also getting some other reports out there, like earnings reports, and some of the banks, I believe, are coming out with their earnings and such. Also, another headline was China still shows on their GDP decreasing. Came in at about 7.5, which was the forecast for this year. They're hoping, uh, but they're also on forecast. Now, this is typically one of the busier times, primarily because um, I live here in LA, or not too far from here. We got Port of LA, where we do a lot of the trade with them, and this is the time where they start gathering a lot of the Christmas shippings. But it's still really not that busy over there. They're not getting the overtimes and stuff, so they're getting shipments, but and this is usually their busiest time when they're getting the overtimes, and they're not quite getting the overtimes. So in the trenches, it's not looking too great for a second half. I wouldn't count too much for second half looking ahead. So let's go ahead and take a look over at the bond market. And the day looked as not as good on Friday, but what happened was we had a bond rollover. So at the end of the day, there was a 28. It shows on the chart here 28 basis points loss. So if you improve that, we're basically even from where we left off on Thursday. Today we would be above that 10-day moving average, and basically at the almost at the 101 level here, um, in that range of the ceiling. So we still show some signs of going upwards. We still have the upward trend to get some improvement here. We still haven't fully closed that gap that since we had that one that Friday around 4th of July, but we're still working on that. But it's slowly growing, which is good because it's building a foundation and it's building the strength to be able to boost us higher if that's the decision that the market's going to take, or go lower. But we could see some little bit of sideways patterns at some points here as well. But right now, interest rates are better. We have improvement in the interest rates today, so that's a good sign. That will help people out there, especially those who are looking for homes. So, and those who weren't able to get off the fence on the refinances. So, I would take advantage of it while you can, because they're not going to probably stay up for too long. All right, folks. Thanks for watching. I hope you guys have a wonderful day. We'll see you guys tomorrow.